So with our clients here at Wiser, we often talk about opportunity funds. Opportunity funds are money that goes into a brokerage account that is not for retirement, but for opportunities that could come up in the future. So a lot of times we see clients using opportunity funds to purchase second homes, maybe some rental real estate down the road. And interesting enough, the net results of all that have, I say, 90% of the time been positive. But there have been cases where people wish they had never purchased the second home or the rental property. So I thought maybe we should do a better job of talking in general about what are the pros and cons of doing real estate investing. So I wrote down a list here of a few things. Obviously, number one is income generation. So when you buy an investment property, the idea is that you're going to then rent it out to somebody full time, or you can do with a lot of our clients, they take second homes that they use for family time, but also put it into Airbnb or VRBO for rentals. The second benefit is price appreciation. So over time with inflation, the stock market should be kind to us with higher inflation environment, but also real estate should be as well. So seeing price appreciation over a long time period, like especially over like a 10-year period, that is another positive for purchasing real estate. I think another one, number three, would be personal use. So if you're using a vacation property, maybe you get to go there a month out of the year or 2 months out of the year, but then the other months it's generating income and covering the cost of owning the property. There are certainly tax benefits to purchasing real estate. Now, contrary to what everyone thinks happens, you buy a property, you have losses, you can write it off in your taxes. It doesn't exactly work that way. What happens is you are basically creating this new entity when you're buying the real estate property. You can depreciate it over 29 years. As you're depreciating it, you're also getting the income, but the depreciation is typically bigger than what the income is. So that's tax-free income. Anything else you spend on the home for repairs, association dues, interest on a mortgage, all those things are also deductible against the income. So very often it's normal for them to be a paper loss, maybe not an actual cash flow, but on paper you've lost money. Those losses will go back into the house as increasing your cost basis. So it doesn't flow directly to offset W-2 income. So it's a great, very tax efficient way to grow your wealth, but it doesn't offset your earnings from your normal job. Diversification of an investment portfolio. I'm very big on our wealthier families having about a third of their assets in real estate. I think this is healthy. A lot of times we push people that direction. Other times people already have it and we start building around it in traditional portfolios. So I guess the downside are a couple of things. One, obviously there's a higher barrier to entry. You should be putting down not necessarily just 20% to stop PMI, but you should put down enough to where the property can cash flow properly. Meaning that if you went down to Hilton Head today and you bought a $1.5 million condo and you could finance 100% of it, there's just no way you're going to be able to rent it enough to cover the cost of ownership. So you may have to put down $500,000 or $600,000 to get it to where the rentals can cover the cost of ownership. That's partially because of what you've seen. Rental rates for vacation properties have gone up, but not as much as the price of the property. So new investors right now are going to have more cash to make all the cash flow work correctly in the financing. Maintenance and management. I own a vacation property up in Highlands. Quite honestly, I don't know if I've ever fully enjoyed it because when I go there, I work on it. And so you have to think about that. Yes, the big things I outsource. I'm not doing my own plumbing. I'm not, repairing the chimney, doing things like that. But there's just always things to be tidying up to be ready for the next rental that comes in. So do think about that. Condos are probably easier because you don't have to maintain the property as much as a home. But you are going to be in charge of maintaining the property. You're basically starting a hospitality business and you want to present the best foot forward when people are renting. Seasonal fluctuations. So you see this especially in areas like the beach where maybe people don't come as much in the wintertime. So you have all your big rentals when kids are out of school, and then the rentals will drop off. So being able to make sure you can cash flow that is very important. to where you don't have to have renters, if you can look at it that way. But having a renter is nice. So in mountain cabins, you see that usually late summer through fall is your busy time, but winter through spring, they don't rent that much. Partially because in the springtime, people don't want to go to cooler temperatures. They want warmer temperatures after a long winter. So you do have to make sure you're budgeting that. Legal and regulatory changes. So don't ever assume you can buy a house and just put it into Airbnb. There are areas of Asheville where Airbnbs are banned. The town of Highlands, North Carolina has tried really, really hard to ban all Airbnb and VRBO rentals from the area. They were successful one time, but they quickly had to retreat when the process to get to that point for them was proven to be illegal. So now they're on the bandwagon again. We see that in, like, for instance, New York City. You can't buy a house in New York City and then put it in an Airbnb. That's against the rules. So the purchaser, so if you're going to buy a property, you're going to want to make sure that you have all the information on whether Airbnbs are permitted or not. Market competition is another one. A lot of times you can have too many rentals in one area, and that's going to drive down the price. So finding an area that's it's permissible, you have a nicer property, you want to put that in a short-term rental program, you want to make sure that the competition is not too great for you. Now, some places, for example, like you down to 30A, there's tons of rentals down there. During the peak time, you could argue maybe there's not enough in some areas because there's very little availability. But in the off season, there's lots of availability. And so your price has to really come down in order to keep revenue coming in. And then obviously, I think the biggest one, and what most people are concerned about or think about is the liability risk. So when you purchase a property and you have guests coming to that property, something bad were to happen, you could be personally liable for that. So if that were to happen, you'd want to have set this house up into an LLC. You want to always have your insurance reviewed every year, that you have the correct insurance, and you're not trying to look for the lowest rate, but quality coverage. So that you have to be careful with that. Certainly, if you have an extremely high net worth, you wouldn't want an insurance mishap to cause you to lose your family's hard-earned wealth because of just not paying attention to LLC documents and not getting the correct insurance. So these are pros and cons. I think that in the end, probably the pros outweigh the cons, but these are things to think about as you're looking at adding real estate to your portfolio.